turn it off, turn it off. Reboot, that's what it is, reboot. Gosh. All right, does that sound better? I mean, test, 1, 2. I'll be singing Inagata Davida here in a minute. So, yeah, right? So thanks for having me. Let me do this a couple times just to kind of get that out of the way. And so, everything Brian said, I'm going to refute right now. I'm just going to tell you. But in actuality, Brian and I work on the same equation, just on different sides of the equation. So he works on the seller side, I work on the buyer side. And I work with buyers to help finance a business, and the vehicle that we use is SBA lending, and so that's really what my expertise is. So I'll get started here. And so I put this quote up here. It's one of my favorite quotes, right? And unfortunately, it's true. So it's really something that that's the reason why we're here. Let's be real. So that's really what it's about. So today, what I'm going to talk about, I'm going to go through SBA lending, the program, what it is, how to use it. I'll give some examples of how I've applied it in my career, and really give you some tools for thought, and really kind of working on and towards your transition of your business. So that's really what it's about. That's me. So I'm a student of business. I've been doing SBA lending for 20 years. Been around the block a few times. I worked at GE Capital for about 10 years right out of school. And the reason I bring that up is I worked with auto dealerships, and I did floor planning and financing for real estate and all other kinds of things. So first off, it gave me an exposure to commercial lending, but it also gave me an exposure to family-owned businesses in the transitions, because a lot of the dealerships out there were started, and passed down in the family. So, I could give you a figure, but 87% of statistics are made up right on the spot, so I could just do that. But no, so I always like that. I like the transition. In fact, I worked with a group that, they passed it down from grandfather to father to son. So it was just kind of neat. I always kept that in my head going forward. So myself, I'm married, live in Chicago. We have 4 kids, ranging from 24 to 31. So our youngest just started law school, so I've got 1 left on the payroll. That's it. But I'm also a cyclist and a musician, but not at the same time. So that's the other thing. I work with 44 Business Capital. So 44 Business Capital is an SBA lender. That's all we do is SBA lending. And most of what I do is business acquisitions. I do some real estate financing, but mainly it's business acquisitions. So 44 Capital, again, it's a direct lender. We're a division, a wholly owned subsidiary of Berkshire Bank. So the bank is the one that actually lends the money, but we do the SBA lending portion of it. We lend coast to coast, so we're a nationwide program. We've got 60 professionals in our organization. We're mostly remote, but we cover the country. Like I said, I'm sitting in Chicago. But I do deals, like I said, on both coasts. But we're a national lender, one of the top 20 in the country. So for our small size, we do a lot of business, about $250 million in 2022. And I'll just tell you a little bit about the history. It started in 2009, and my boss is one of the founding partners, and he was a business broker like Brian, but the benefit to that is, so he understands what it is to represent a business and what it is to get financing and the bumps and getting through that process. So that's kind of been our mantra in 44 Business Capital. So we're flexible. We do all types of businesses, everything from convenience stores up to manufacturing companies, and everything in between. And we look at the story of the business as opposed to just checking the boxes. Now, finances, the financials are important, and you have to be able to cash flow it, but sometimes there are bumps in the road, and we're able to look at that. So that's something that we're able to do. Bless you. So this is just a map of where my counterparts are. So ignore everybody else except for this guy right here in the middle. That's me. It's based in Philadelphia, so a lot of the guys are on the East Coast. We have one person out here in Colorado, but again, we basically cover the entire country. Just doing that. So what is SBA financing? Who knows about SBA financing? Who's heard about it? Okay, good things, bad things?
It was very favorable during the pandemic.
Yes, it was. We're still doing deals.
When I first started,
yeah,
we weren't contractors, and so no track record to demonstrate.
Yep.
We did own homes and things like that.
Right. So kind of a startup then? A startup, that's good. Yeah, that's one of the main benefits of SBA. It has some flexibility in things that a conventional loan doesn't provide. Collateral being one of them. Track record is another one. So that's one of the things that we talk about here is that, you know, SBA financing, people think, oh my God, it's so tedious and it's the loan of last resorts, but it's not. It's really a very powerful tool because it provides flexibility in areas that a young buyer may not have in things like money down, or they may not have collateral, those types of things where if we're looking at a business, we evaluate it a little differently than a conventional lender would. We look at the cash flow, we look at the experience of the buyer, and we look at, you know, the business operations, of course, and all of that. But whereas a conventional lender is going to look for collateral, number one, and then cash flow. So we kind of flip the tables on that. So again, flexibility is really the key for the SBA and what we do. So that's one of the things that about this program. It's kind of a buyer advocate program because of those things. So the SBA requires only 10% down typically in an acquisition scenario. Also has a longer amortization so that the monthly cash flow or requirement to pay back your loan is less. So it helps with the transition. It kind of smooths that transition out. But it can also help the seller with things like if there was a lumpy year, like I say, if you had a couple years that may not be typical of how you typically operate, and if there's a story to tell, we can listen to that story and kind of get over that and go through with the loan. So basic requirements for the SBA, and we talked about this with tax returns, but the SBA, you know, we still have to do prudent lending. That is, we still have to kind of go through some of the same criteria that we would with conventional lending. So we have to have a creditworthy buyer. They have to demonstrate that they can pay back a loan. So we look at their credit history. We look at industry experience. Transferable skills are key. So again, if you have an employee in your ranks that, you know, knows the operation and can operate it, that's valuable. That's a valuable experience. We look at clear criminal history, so we don't lend to felons, and do they have the ability to make a down payment? I'll talk more about this later here, and then the other key one is, you know, sufficient cash flow from a business. And from the SBA perspective, that comes back to tax returns because they use tax returns to verify the repayment ability of the business or the cash flow of the business. So that's where, you know, you talk about you can do two things with tax returns. You can manage your tax liability, or you can sell your business for what it's worth. So that comes back to the whole multiple thing. So being able to demonstrate the cash flow, the actual cash flow of the business, will help you in the long run. So that's just something to keep in mind with that. Any questions so far?
What's a typical length of the note that you would borrow for a business?
So if it's a business only, we do 10 years. If it's got real estate involved in it, so if there's a building per se, we can go up to 25 years. So if there's a component of each of those in there, it's a weighted average of the two. So yes, sir.
I noticed you weren't listed in Arizona. Does that mean that you don't take care of Arizona? Or
No, so that listing was just where our bodies are, but we can lend all over the place. Yeah. So.
Current interest rate. Oh, sorry.
I'm sorry.
Just current interest rate.
Current interest rate, so the program is based on prime. Prime now is at 8.5. And the program, basically we could go up to, the highest I could charge you is 3 points over prime. So what is that? 11.5, right? So we don't typically do that. But it's really based on the warrant of the business and so on. But, you know, interest rates are only part of the equation again, but you're probably looking at about 10.5 is what you're looking at. But interest rates with this particular, so when the rates go up, but you also get the benefit when the rate goes down as well. When I started in this business back in 2004, interest rates started rising, and I think they were getting right around 8% before they started coming back down again. So they go up and they go down. But the idea for the SBA is really to get you into the driver's seat, or get your candidate into the driver's seat of that business. And then down the road, they can refinance out of the SBA loan into a conventional loan. So that's really kind of what it comes down to. And that's really the goal. SBA is not permanent financing by any means, but it gives you enough flexibility to get you into the driver's seat of that business in order to sell it or buy it. So.
There is a requirement, though, for how many years you have to hold that loan before you can refinance it, right?
No, a seller note there is.
Okay.
So a seller note has to be in place for 24 months. You have to have 24 consecutive payments, on time payments. But yeah. So.
And if I remember correctly, you start through your conventional lender, they say, sorry, kid, you don't have any experience in the business. And then SBA, or that was what I remember about the process.
Yeah.
Is that still a reasonable?
I mean, you could start with your conventional lender, but if you know that candidate doesn't have, the 10% down, why do that? Just start with an SBA lender. That's what I would say. So really, it's a matter of kind of playing your best hand, if you will. Yeah.
So when I got my SBA loan, I did go through a bank.
Mm-hmm.
So is that usually how it does work, or we would
So.
directly through SBA?
Yeah, let me give you a little background. So the SBA is actually a program that banks participate in. So it's a program that is overarching over the banks. Banks are the ones that actually lend the money, so it's the bank's money. But the SBA provides a guarantee for the lender, and you can think of it kind of as an insurance policy for the bank to mitigate the risk of that loan that they might not do on a conventional basis. So they guarantee 75% of the loan. So if the loan goes bad, the bank really only has 25% at risk on the table as opposed to the full 100% that they lent on. So, that help? So the SBA, basically, what does that mean to me? So as we've been talking about all day, a fan of the plan, right? So make sure that you have a runway and have some things identified. But really, it comes down to, how do I sell my business to somebody who can run it but doesn't have the money? And that's really where the SBA can come in, because we're looking at avenues to lower the capital investment. So 10% as opposed to maybe having to come up with 50% or whatnot on that. Other options that you might have as a seller is, can I fund the sale myself? But you have to consider the risk and the delayed reward on doing something like that. You could sell it to somebody that could pay cash for it, or finance it through other conventional means, maybe a private equity, something like that. But they may not be the right fit for the company. So really, the SBA is a good tool to use for buyer and seller. Again, it provides flexibility for the buyer and allows the seller to have some flexibility. Again, if you have an individual identified in your organization that you want to maybe sell this business to, it gives you some control as to who might be buying that business then. So again, the buyer has an advantage of lower capital injection. We can leverage their experience, and it creates opportunity for a story if there needs to be one. The seller has advantage from control and also has flexibility for, again, like I said, if there's an off year or something in their financials. As Brian had indicated, we'll look back at 3 years. Now with COVID, we do kind of skip over that 2020 year. So we'll look at 2019, we'll look at 2020, but then we'll really look to, did that company bounce back after COVID, basically. So I'm going to go through some case studies. And I missed that slide, but I'm going to go through some case studies. So these are deals that I financed where on the surface, they're challenging deals. They probably would not have gotten done at a conventional bank. But this is a construction company in the Chicagoland area. It is mainly residential, but also some commercial. It came to me through a business broker, because I deal a lot with business brokers and financial advisors and such. But this one came through a broker. The borrower had really, on surface, no industry experience. He was a PhD in physical therapy, and he had been running a physical therapy clinic for about 10 years. So he had good management experience, and he was very high energy, very smart guy. But come to find, I was working with him and talking to him about, why, as one of the questions I always ask, why do you want to buy this business? What is it that you think you can bring to this business? How do you think you can take it to the next level? What do you really like about it? So he went through all of that, but it found out that he is also the son of a guy that owned a construction company, so he had some background in it. He also had some rental properties, so he knew how to get things renovated, and he was project management and so on. So he had good experience. I had him put that into a narrative, and we used that to leverage underwriting for them to buy into to giving him a loan. So
What kind of volume were they doing to
about
pre-construction?
2.6. Yeah. So it was a nice run. It was a husband and wife company. It was nicely run. Next one was a company down in Florida. It was a plumbing. It's a backflow testing company. So another one that came from a broker, but this one basically was in Florida. The buyer was in Washington, the state of Washington, and he had no real direct industry experience again, but I did find out through our conversations and working with him that he managed a team remotely of 10 people, so he had that capability. Again, he's got some management skills and even remote, but that still wasn't going to be enough for him to do a deal, buy a company in Florida, and he's in Washington. How are you going to run that? So turns out that he has a business partner that actually relocated to Florida who had plumbing experience, and so they partnered together. The guy in Florida took 10% of the company. This guy retained 90%, so we were able to structure the deal that way, and we were able to get it approved from our credit shop anyway. And now they're actually looking for their second business down there. So this is another company that, again, there's a nice, if anybody's from Texas. Anybody from Texas? No. So this is a company that's a building supply company down near Industry, Texas. It's a good area, niche company. Been around for a long time. The borrower that was coming out of corporate, I call them corporate refugees, had a nice 401k. We were able to leverage that 401k to access money to allow him to put his down payment down. The seller held a $100,000 note. And again, I went through with him, what are your transferable skills? He came up with a narrative. We did an interview with our underwriter, and we were able to get the deal approved. So again, just kind of overcoming some of the just some of the adversities of that particular deal. And lastly, this is one that kind of dovetails into what we're talking about with phantom stock. This was an electric company. It was started by two guys. They built the company up. They took on an employee that they identified as who they wanted to buy this company. The company continued to grow, and they eventually, with the help of their CPA, were able to provide phantom stock, which is what they use to leverage the ownership of the company to buy the company outright. Any questions so far? Okay.
Does that concern you at all that these people have zero industry experience?
It does, but that's one of the things that we try and get over. And one of the things that shores up this is not only do they have good transferable skills, but they also have companies that have good systems and people in place to continue that. And so Brian touched on having, employment agreements, and that might be something that we would come up with. I did a plumbing company where there was a master plumber license that needed to be held by somebody in the company in order for the company to operate. The buyer didn't have that, but he basically come up with an employment engagement for this employee, and maintain that license or the continuity of that license in order for that business to continue to operate. So, yeah, that's something, but you just have to look at all the pieces to it.
Are there any, does the SBA require any security, real property, any of that? Like, will they take first position on the buyer's real estate or something like that?
Good question. So, yeah, so the SBA, I'll put it this way, collateral is not a top piece in the SBA when I'm looking at a business. If it's not fully secured, the business that is, I have to look to the individual, the personal guarantor, the buyer, to see what kind of assets they have. So we would put a lien on any personal property that they had, either their primary residence, but it could be secondary, could be rental real estate, something like that. But once they refinance out into a conventional loan, that goes away typically. But really, it comes down to we're all mitigating the risk. So if you're not willing to pledge something like that, then maybe I don't want to lend you $1 million. That's really what it comes down to. Yeah.
And this may be a CPA question, but what's the taxable event to the seller for a $1.5 million?
I don't know what the tax advantage is. That's a good CPA question. I don't know which one's the CPA here. I don't know. Somebody up front.
It is taxable, I don't know.
It is taxable, but typically, like when it's asset sale.
High rate too, right?
Yeah.
I mean, it's going to be at the top rate.
Yeah. I don't know about
It's
the.
taxed at ordinarily income, isn't that right?
So whatever your tax bracket is.
Yeah. Yeah. I mean, there's going to be capital gains and so on from the seller perspective. Yeah.
That's a subtle way for me to go.
So, any other questions on that? So these are all, great deals that we did that we're, very happy to be able to provide financing and get these businesses sold. How can I help with SBA financing? Again, I've got 20 years experience. I work closely with not only the buyer, but the seller. I work with the CPA, I work with the attorneys, and our internal credit folks to really get a deal structured and then ultimately financed. I pre-qualify candidates, so if you've got somebody identified, I can talk to them about what it is they're going to be in for as far as SBA financing, the application process that they'd have to go through, the potential of having to pledge collateral, if that's going to be a deal killer. Some people it is, and some people it isn't. So that's something that I can work with your candidates on. So I've financed over $200 million in SBA lending in 20 years. So like I said, I've been around the block, but my job is really to successfully facilitate a transaction, and I do that with understanding the SBA rules and regs and what's out there and how to structure a deal within the SBA guidelines, but also it's really about what my credit department is willing to do, so the appetite of what my credit department wants to lend to. So I have to marry those two pieces in order to structure a deal properly.
As you are representing the buyer, or you're coming at it from the buyer's perspective, are you still working with the same valuation methods, the SDE or the...
Right. Yeah, we do. So we look at the cash flow.
And beat it up, just like hopefully the seller did to get real with themselves.
Right. So when I get a deal, it's already come through Brian. They've already set a value based on what they feel is the cash flow of the business. I'll look at that and I'll evaluate it based on maybe how the bank does. Now they talked about SDE, and that's seller discretionary earnings, and those are real numbers that value that go to the seller when they buy it. But from a banking perspective, we don't do a lot of that add back gymnastics. But we look at it maybe on a little more conservative basis. Things such as cell phones, or maybe even cars, those types of things, vacations. They talked about travel and all that. We may not add that back as part of our cash flow analysis because we figure that maybe the buyer's going to do the same thing, so it's kind of a wash. But the valuation comes out of what the business broker sets that bar, and as far as that value, it really comes down to what the cash flow can support. So if they want to sell that company for $4 million, but it only cash flows 2.5, I can really only finance 2.5 is what it comes down to. So we do also sorry, go ahead, you had a question.
On all the deals you've done, I was thinking that this may not be a business broker sales structure, that if we bring a key employee into a share interest and orchestrate a 2 or 3 year deal before maybe moving forward, we wouldn't necessarily have to involve a business broker.
And typically not, because you're not putting it on the open market.
So out of all the deals, what percent of your deals our business broker involvement versus?
So I would say I work with business brokers, other commercial bankers, CPAs and attorneys and financial advisors. Those are my referral sources. I don't go down to the end user typically, so I'm using intermediaries at some point. So I would say from a business broker perspective, it's a hefty sum. It's probably about 60%. It varies each year as to where things come from. Like the electric company deal that I did, that came from a financial advisor. They were just trying to help their client out. The commercial lending field is also, commercial lenders, I get a lot of deals from those guys too, because maybe a deal falls out of their liking and they need to get it out of their portfolio, so we can refinance a deal that way. But primarily, we're working at, I do a lot of business acquisitions is really kind of what my main is.
Will you do combination financing with the owner? Say
Mhm.
there was a $4.5 million valuation, cash flow is only 2.5. If the seller makes up that difference?
We can, if it doesn't, overly burden the buyer going forward. So we may have to do a combination of maybe that part of that seller note is on standby for a couple years, just to kind of smooth out that transition, so no P&I can be serviced on that, but maybe there's interest only can continue. So there's ways to do that. One of the questions I would have for my buyer is, okay, so this guy's asking $4 million for that business, values at 2.5. Do you see the value in that difference, in that delta? And they have to really kind of be on board with that. But maybe there's a product that's coming out that they're that they can see on the horizon. That's something that we're not aware of, or perhaps that's going to provide value down the road. So we can do on a projection basis, let's say. Maybe they're going to pick up a new client, or something of that nature. Maybe they're going to start a new division. Maybe they're going to add HVAC to their current offerings, something like that. So that might be an option for you.
James, did I miss, are you guys valuing businesses differently than the way that
Brian? Yeah. We don't value businesses necessarily, but we do have to hire a third-party valuation. So these guys will do their valuation based on what they see. We hire a third-party valuation company that comes in. That's what the SBA requires us to do, and that's really the number that we have to use when it comes up. So if these guys value it at $2 million, my guy comes back at $1.8 million. $1.8 million is where my benchmark is then.
But you had mentioned cash flow, so that, how does that translate to value?
So cash flow, so EBITDA, it comes back to EBITDA, and so we look at multiples on that side of it. So if I'm looking at a business and they're asking a 6 multiple on a business, I might question that. Typically 3 to 3.5, 4 times EBITDA is kind of where I would think it falls on that. So again, that plays a part in it, but it's really the cash flow that's coming off that, which is going to play into what the value is. So those should all match up, is what it comes down to. Yes.
Not to belabor the point, but just getting back to cash flow and the SDE. So if the business is selling for a price that the existing cash flow with all the owner's salary and benefits might not support that sale price, but once the owner's salary is taken out, it does. Do you look at it that way?
So when we look at SDE, but we really look at EBITDA because that's a little bit more of a conservative approach, because then we take out, like I said, the cell phones, the cars, that type of thing. But we do take out the owner's comp that you're taking or a seller is taking. But we also have to burden the business for the new owner. What is he going to need to take?
Well, if it's a key employee that's already on site.
Okay, then I wouldn't have to add anything back. I would just then the seller's salary would be a wholly add back on that.
And then the other question I had was, if the buyer doesn't have a complete 10%, can the owner contribute to that deposit?
Unfortunately not, directly anyway. So you can do a gift. That's one of the things I'll talk about here in a little bit, but there's a couple ways to help an employee raise that 10%, let's call it. But a seller note doesn't come into the equity injection portion of it, or the down payment side of it.
So are there valuation professionals, and where does that start at? You know, you were talking about having your valuation of the business, but is the owner, the seller,
Yeah,
do a valuation of?
you can.
Provide all that information to and have you, because I've gone through this before,
Mhm.
where you have to go through all your inventory of tools and
Yeah.
equipment. Wow.
Yeah, it's kind of invasive on that. But yeah, so you might do a valuation, especially if you're listening with a business broker, to kind of get an idea where that value is going to come in at. From a lending perspective, I have to have a third party do that. So there are a number of companies out there that we use that do a valuation that are in compliance with the SBA and how they want to see that.
So they're going to ask the seller for the boatload of information.
Well, a lot of it comes from what we've already gathered. When we do an SBA loan, I'm going to collect 3 years of tax returns. I'm going to collect the interim P&L balance sheet, and then if there's AP and AR, I may ask for an aging on those. So I'm going to have a lot of that information already that we would supply, so that kind of gets them started. But then if the valuation company has additional questions, maybe they have questions on the operations or maybe a particular period of time to help them understand the business, then they would come directly to the seller.
And just to follow up on him, and maybe he was asking, it's kind of like the project we do, we go see a client, they want to know, is it feasible? So where could we start to figure out what the value of a sale of our company would be?
Well, the value of the company is probably more of a Brian area. Feasibility of financing, that would be something I can certainly help with. So I can do the pre-qualification. So if you come to me and say, well, I've been working with, and you could hire a valuation company too. They're not cheap. They're about $2,500, but it gives you an idea where you're at. But you could say, well, this company says the value is about $3 million, and this is what I'm thinking. What do you think this is financeable? So I get that. So when I work with business brokers, they have listings and they have rudimentary financials. They typically have the 3 years of tax returns that I need. So I'll go through and I'll look at that. I'll put it into my model and see if it cash flows to a point where I think I could get it approved. And if so, then I can pre-qualify that business, not pre-approved, but pre-qualify that business for financing. So I do that quite a bit.
And this may not be a question for you either, but if you it gave the bonus funds to a trusted employee to get his 10%, and you're giving him this over a couple of years to build up that 10%, and he decides or she decides not to do it, that's money that you've kept. Do you then owe that person that money?
I would think so. Yeah. So you could maybe put it into kind of an escrow, for that matter, for them, and hold it aside and see if that works out, as opposed to giving them phantom stock if you're not a C Corp or an S Corp.
But it could be some nice handcuffs.
True.
To keep, they can see the money accruing in an account that you have reserved that you want to launch them, but if they go through with the sale, so
right.
It's not qualified money or anything.
Right, right. And it still could be their money. It's just reserved for this purpose at that point. Okay. So these are, the SBA, like I said, is one vehicle to use. There's some tools within that I'll touch on here. Some of these we've talked about already. I know that some people were in here talking about the employee stock purchase plan. We touched on the stock allocation, but gift is kind of what you were talking about. Can you gift him the money to buy the business? Unfortunately, not directly. So a gift is eligible for a down payment if it comes from a third party. There's usually a gift letter, so it could be, Aunt Martha gives you a gift, or you could have it from a friend. You could have an investor as well, and those are options that you can do for your down payment for that. The partial buy-in. So the SBA, over the course of my career, there's been some changes in the SBA and some of the rules, and one of them is fairly wholesale in that before you could only buy 100% of the company. You couldn't buy anything less than 100%. Well, they've instituted some rules now where you could buy a portion of the company. So you could sell, say, 90% of your company to an individual. And retain 10%, maybe as you want to continue working, something like that. So that's an option. And the other example I was using with the seller that had a master plumber license, if he so chose to do so, he could have stayed on and maintained that license and part of the ownership. Now, the caveat with that is that while you can sell 90% of your company and you only own 10%, you still have to personally guarantee the whole thing. So does that really make sense? And so that was a little bit of a shortfall with the SBA and how but sometimes they throw things at the wall and see if they stick and see what kind of reaction they get. So we'll see what happens with that. The stock allocation, again, can be provided as a bonus or an award. And once they accumulate 10%, as a down payment, they can leverage that and buy the rest of the 90% out. Now, in both of those scenarios, the SBA also has some guidelines as far as the balance sheet or your company. It can't be highly leveraged, so you can't have more than 90 cents of debt for every dollar of asset that you have on your balance sheet. So that's just another hurdle that you'd have to go through. And the employee stock purchase plan is another one that we talked about. It may or may not be a fit, but it certainly is eligible under the SBA, as well as the employee co-op as well.
Will you fund that, the co-op?
Yeah, we'll do the co-ops too. They're a little tricky, but we'll do that. I haven't done one personally, I'll just tell you that. But
One thing,
yeah,
because this is what Rob mentioned yesterday. The primary difference being that if you finance the owner-run cooperative, all the borrowers are personally responsible for the loan.
right.
And he said the one difference with the owner-run cooperative, the lenders they have, that the loan is non-recourse.
Yeah. So, we don't do a lot of them, but they are eligible from an SBA perspective. So I would, if you were going to go that route, I would direct you to somebody like Rob, who's probably more well-versed in those types of things. So no problem with that. So that's it. I mean, like you had indicated, if you wanted to run a deal by me or just any kind of scenario, I'm always happy to listen, and I'll give you my 2 cents on what I think I can do with that. But yeah, use me as a resource. I'm happy to answer any questions you have. So that's all I have.
Are there any fees for that?
What's that?
Are there any fees, a charge for?
You may have to listen to a dad joke or something. So, no. But I will close with a little trivia, if you like.
Yeah, sure.
So, did you know in the Canary Islands, there are no canaries? None. Same thing for the Virgin Islands. There's no canaries there either. Have a nice day.
Thank you.